Good morning and welcome to this month's Sustainability and ESG webinar. Now in this month, we are looking at approaching 30 June and what that means for your sustainability reporting and your sustainability journey. It's a little bit of a recap on what we've been discussing over the last 6 months, and it's also setting the scene for what we'll be discussing in our sustainability webinars for the next 6 months. So halfway through the year, or nearly halfway through the year, let's take a stock take on what we've done and also plan the next 6 months. My name is Aletta Boshoff and I'm a partner at BDO in Australia, looking after IFRS and corporate reporting, but also ESG and sustainability. I would like to start by acknowledging the traditional owners on the land on which all of us meet today. For me, it's the Wurundjeri people in Melbourne, and we pay respect to elders past, present and emerging, and we extend that respect to Aboriginal and Torres Strait Islander peoples that are here today on this webinar, and thank you for joining us. So if we look at our sustainability webinar series so far, we started the year by putting a spotlight on a number of different frameworks. So we looked at the United Nations Sustainability Development Goals. We looked at the World Economic Forum, International Business Council Disclosure Framework. Then we looked at carbon footprint. How do you measure your carbon footprint? We looked at the TCFD recommendations and the upcoming IFRS S1 and S2 to be issued by the ISSB. We also looked at getting your board on board, the business case for sustainability. Last month, we looked at GRI standards, and this month we do a recap of the year to date and a little bit of a look at the year ahead. Now you can see we've now scheduled our next 6 sustainability webinars for the rest of the year, and all 6 of them are focusing on measuring your carbon footprint according to the Greenhouse Gas Protocol. So next month we'll start by looking at setting the organizational and operational boundaries, which are extremely important in order to measure your carbon footprint. And then we move on to look at measuring Scope 1 emissions, measuring Scope 2 emissions. We look at measuring Scope 3 emissions over 2 months. That's the hardest part. So we'll take 2 months to look at that. And finally, at the end of the year, now that we've measured our carbon footprint, we explore a few decarbonisation strategies. So that's what's ahead for the next 6 months. Please register for those. They're now available on our website. When we look at our other webinar series, it's our monthly IFRS and corporate reporting webinars. And this month, we are looking at how to implement the TCFD recommendations or disclosures in your 30 June 2023 financial statements. And then for the rest of the year, we are back to more traditional IFRS topics. We know it's a reporting season and there's always questions around lease accounting, convertible notes, how do you spring clean your balance sheet, some tricks and traps of tax effect accounting, etc. So I think the biggest news in June is what is coming soon. And that is, this is a screenshot by Sue Lloyd. She posted this on LinkedIn. She's the Vice Chair at the International Sustainability Standards Board. She used to be the Vice Chair at the International Accounting Standards Board. And Sue Lloyd is an Australian. She's from Sydney. But very interesting, last week she posted, exciting that this is so close now. And what she means by that is that ISSB have nominated the 26th to the 30th of June 2023 as launch week. So that's where they'll be launching the new IFRS S1 and IFRS S2, their very first standards. So launch week is coming in 2 weeks' time or in a week and a half time. So very excited about that. So we're really counting down the days for that. The other thing if you are based in Melbourne or close to Melbourne and you would like to join us for an event on the 23rd of June. So we're having a lunch and we're looking at the evolving state of sustainability in Australia and why we need to prepare now. So this will be the Friday before launch week. So we're trying to get ready for these new IFRS S1 and S2 standards. But the focus is absolutely on 30 June 2023. What do we have to do for 30 June 2023? And how will that put you in a good place to implement the new IFRS S1 and S2? So it's a lunch event. There's a link there if you want to register to come and attend the lunch, please do so. Thank you for us. I hope to see you, and thank you for the clients and markets and team here at BDO for putting the event together. So embracing sustainability. We've been doing these webinars now for 18 months, and we've seen a lot of people starting or activating their sustainability journey. There's a bit of a recap. Remember, when we talk about sustainability and ESG, it's not just climate change, and there's a number of environmental, social, and governance factors. And it's incredibly important that when you go on your sustainability journey, you start off by thinking, who are your stakeholders and which of these items are important for your stakeholders. The one thing we know globally, but also in Australia, is that climate change, the very first environmental factor, is incredibly important. And we know in Australia we now have legislation around climate change and being net zero by 2050. We know a lot of organisations have signed up to that. So climate change, absolutely a big focus, and that will also be the first mandatory IFRS standard, and that is IFRS S2, and we expect to have a similar requirement in Australia. So climate change, incredibly important. And when you look at climate change, the way to measure and report on climate change is actually measuring your carbon footprint, scope 1, scope 2, scope 3, and then also setting targets on how you're going to reduce that carbon footprint over time, and obviously reporting on that on an ongoing basis. So no doubt, climate change and measuring your carbon footprint, reporting your carbon footprint, coming up with a decarbonisation strategy is a huge focus across the world, including Australia. However, that doesn't mean to say that these other sustainability measures and factors are not important for your business. So important to assess your stakeholders, whether it's investors, whether it's your staff, whether it's customers. What would they like you to report on? Would they like you to report on diversity, employee engagement, maybe community engagement? Data protection and privacy, we know, is incredibly important, or governance measures, for example, around modern slavery. So when we look at sustainability, this is the big picture. These are all the things included. A number of these things are starting to become mandatory. So climate change reporting is becoming mandatory, to report on your gender pay gap. So that is part of social and diversity, equity, inclusion, but that mandatory reporting of gender pay gap information is becoming mandatory for larger entities in Australia. Reporting around modern slavery under governance is becoming mandatory for larger entities in Australia. So more and more, the items listed here are becoming mandatory to report on, especially for the larger end of town. Again, some people just focus on what is mandatory, so climate change, gender pay gap, modern slavery. Others take a more proactive approach and they say, what are the things that's important to our stakeholders and to us? Let's focus on that, let's report on that. And I would say others are more pulled along by the larger end of town. So if you're a supplier to an entity, a larger entity that have to be reporting, they will also come to you and ask you to do certain measurements and certain reporting to help them to meet their mandatory reporting requirements. I should say climate change is an incredibly good example of that. Because if you look at measuring your carbon footprint, your scope 1, scope 2, scope 3, it's important to note that for most organizations, the largest part, 80% or more of their carbon footprint sits in scope 3. And scope 3 are actually indirect emissions that happen or occur outside the boundary of the organization. So that would be emissions by your suppliers. Therefore, the only way an entity can minimize, reduce their carbon footprint is to address that scope 3 emissions, which are sitting with suppliers. And therefore, we're seeing that a lot of large entities are coming up with plans on how to engage their suppliers, to ask them to measure their carbon footprint, ask them to commit to certain targets, ask them to report on their carbon footprint and their decarbonisation strategies. So more and more that's happening as well. So as a starting point, we're talking about all of this to the extent it's relevant for your business. So it's a big task, and it involves most people in the organization. I thought it would be a good time to maybe showcase some of the work that a number of our clients have done around sustainability. And we've framed it around inspiring tomorrow, and it showcases retailers and wholesalers that have taken concrete steps towards a more sustainable world. So we've got 4 videos, one from Frank Body, Fond's Motto, Soconomy, and Australian Bay Lobster producers. And we'll be releasing these videos over the next number of weeks. The first one has already been released, and that's Frank Body. So if you click on that blue block, Be Inspired, on the website, you'll be able to see that video. So at the bottom of this page is a link to these videos on our website, and you'll see the others being released over the next number of weeks. So if you want to be inspired by some of the great work that some of our clients have been doing to date, please watch these videos, and it tells their journey, often starting quite small, and then how they've embraced it over time. So I would like to talk today about activation of your sustainability journey. So if you've not activated your journey yet, let's discuss why this is so important and why you can no longer ignore it. And we know there's 3 reasons we cannot ignore sustainability. Because if we want to communicate all the information about your organization to your stakeholders, if you want to continue to have access to capital, to have access to markets and customers, and have access to people that work in your business, this is a journey you need to go on. Not just because it's becoming more and more mandatory, but it's driven by market forces around access to capital, customers, and people. So we have prepared a checklist for developing your sustainability roadmap. Now you can download this checklist by clicking on this link, and I've got a bit of a screen grab from the checklist. So it's a checklist or a roadmap to help you to get started, but not only get started, how would this journey unfold for you, and what are the steps you have to go through? A lot of people are saying to us, Aletta, we want to do something in sustainability, but we're struggling to see logical steps. We're struggling to see a roadmap, and therefore we've put this checklist or roadmap together. If you look at this checklist or roadmap, we've put it in 6 steps. But I think it's important to look at the first 5 together. And then step 6 is only the continuous improvement on what you've done in step 1 to 5. And so you start by assessing the current state of your corporate ESG activities. You would think, you're not going to do any ESG activities, but you're doing a number of amazing things. So let's look at all your current activities and consider whether they could fit within our ESG and sustainability framework. Then in step 2, you do a materiality assessment and you consult with your stakeholders. So step 1 assesses what do we already have in place, like a stock take. Step 2 is let's do a materiality assessment. Let's speak to our stakeholders and see what they expect of us, what they want to see. In step 3, we commit and we leverage our current initiatives to develop our strategy. In step 4, we measure, we calculate our ESG maturity, and we have a gap analysis or conduct a gap analysis. And in step 5, we prepare and we finalize a sustainability report. And then we move on to the continuous improvement part in step 6. So if you look at your first step, it's really important to remember that you are likely to already be doing a number of amazing things around ESG and sustainability. You might not have tagged it as ESG and sustainability. So maybe, organizations already do a number of great things around occupational health and safety. Most organizations already do a lot of work around cybersecurity and privacy. A number of organizations are already looking at legal and compliance aspects, already have a number of governance structures in place, already engage with employees and ask for feedback, already get customer feedback, etc. So it's really important that we say, now that I understand what sustainability is and how wide sustainability and ESG is, let's have a look at all the policies and procedures and great things we already have in place. And let's tag them as ESG or sustainability initiatives. Now, that's why we often say sustainability is a firm-wide approach, because a number of these things around sustainability happen in the finance team, happen in HR, happen in IT, happen in your legal and compliance team, or marketing team, or customer experience team, or even operational team. So let's identify all these amazing things and acknowledge that these are part of sustainability. So step 1 is not put in new things, it's just let's do a stock take of what we've already been doing in our organization. And I think you'll be pleasantly surprised. Then in step 2, and this is actually incredibly important, is we want to prioritize all of these sustainability and ESG factors, acknowledging that there's a lot to do and that we cannot do everything, and we definitely cannot do everything at the same time. And therefore, it's really important to engage with our stakeholders. So who are our stakeholders? How do we engage with them efficiently and effectively? How do we get them to prioritize what they are interested in? So get that feedback, but also considering the business and what we want to influence, what's important to the business, what's within our ability to influence. And when you do the stakeholder engagement methodology, not all stakeholders will be treated exactly the same. You would have your tier 1 stakeholders that have direct influence, so the owners or the board, and we will do a lot of work to engage with them and regularly engage with them in order to get feedback. And then if we look at tier 2, there could be other stakeholders that have influential opinions, so employees, suppliers. Again, how do we engage with them? And we could also have key customer groups, tier 3, and maybe other stakeholders that we want to engage with. They might not be the highest priority, but we want to get their feedback. So again, how do we do it? How do we collate what they say? How do we come up with a document that adequately captures the priorities for your business? This is incredibly important, because if we are spending time and money and energy on sustainability, and we want to make sure that it's hitting the mark and then it addresses what our stakeholders want to know. And then when we go to step 3, this is where we commit. And so now that we've got a clear picture of the overall stakeholder priorities, it's now time to say, okay, which of our current state ESG initiatives that we've assessed in step 1 do we want to leverage? How do we leverage it? And how do we develop a strategy that builds on those existing initiatives? And how do we take sustainability at your business to the next level? So determine the priority activities that we want to address, identify the current initiatives that can be leveraged to increase their impact, and again, define key policy areas. So this is where we're thinking, we know what we've got. We know what stakeholders want in step 3. How do we leverage that? How do we take the next step? In step 4, we get to measuring. Now, it's important that we capture and report on the key measures, the things that our stakeholders want to know. So it's important to identify and collect data to measure a baseline for the items that we've agreed is a priority for us. So if we agree that measuring and reporting our carbon footprint is a priority, we have to make a start, and we have to do a baseline carbon footprint measurement. Now, a lot of people are saying our carbon footprint is not looking good, so we don't want to measure. We want to put in decarbonisation strategies first, and then we will measure and report. That's not the right way. You want to measure and report a baseline, a starting position. And then you want to say, now we've got strategies to reduce this baseline. And then you can show over time how you've reduced the baseline. If you don't have a starting point, how do you show to what extent you've reduced your carbon footprint? So that baseline is incredibly important. And that baseline is important for all of the measures that you decide you want to report on, whether it's diversity numbers, whether it's modern slavery, whether it's cybersecurity. A baseline, a starting point, incredibly important. Because once we've got a baseline, we can look at the gaps, where we want to go to, and agree on initiatives to address the gaps or achieve our targets. Then in step 5, really important to prepare reporting. Now, some organizations, there's no one way to do this. Some organizations do their very first report and they keep it internal. So they have a baseline, they do a report, they circulate it internally. It's an internal sustainability report. Then in the next year, they maybe publish that report externally. Maybe the year after that, they get some limited assurance over the report. Over time, the requirement will be to get full audit of these reports, but we're not there yet. So it's continuous improvement. It's a journey. So organizations can decide, do you want to prepare this report and just keep it in-house initially? Or do you want to prepare it and put it out there? Do you want to get assurance, etc.? So it's important when you look at this report that you consider what framework you want to use, what content you want to put in, who will approve it, who will oversee it, who will drive it, and what data you need, who are the data owners. And over time, I think the whole process will be streamlined. For example, last year at BDO, we prepared our inaugural sustainability report according to the World Economic Forum IBC. And after we finalized the report, we went through a process of identifying what we could do better in 2023 when we do our second report. And we said, listen, we want formal sign-off by data owners. We want to put more governance around it. We want to put more structure around it. So as we go on this journey every year, entities will do this better, more efficient, more effective. The key thing is to make a start on putting this report together. And then obviously we get to step 6, where we do this on an annual basis. So now we improve our systems and our processes. We improve the quality of the data, and potentially prioritize our investment, our time, our efforts in doing this better, especially if it's driven either by mandatory requirements or by the market demanding more and more information. So really, I wanted to start by explaining, how do we activate this journey, how important it is, what a roadmap could look like. I also want to say, if you look at that roadmap of the 6 steps, there's no requirement that every step should take a certain amount of time, or that every step should necessarily follow the previous one. So you could do steps 1 and 2 at the same time. You could do a stock take of your current initiatives whilst also engaging with your stakeholders to see what they're interested in. So that could run at the same time. Then you move on to prioritize, etc. Each step in that roadmap can be as detailed or extensive as you want it to be. So some organizations do spend a lot of time and energy around stakeholder engagements, where others maybe have less stakeholders and easier to engage with them. But that gives you an idea what a roadmap could look like, and there's a checklist where we've documented it all in one document with explanations, and please download that. The next thing I want to touch on is sustainability reporting. So there's 2 distinct things here. We've got a sustainability journey, which is activating sustainability, looking at all these measures, doing stakeholder engagement, etc. But then there's a separate thing, which is the actual reporting of your sustainability endeavours initiatives. And when we look at sustainability reporting, I would put it into 2 big categories. On the left-hand side in blue, there's voluntary reporting in a separate sustainability report. So that's similar to what BDO Australia has done last year with our inaugural sustainability report. It's been voluntary, it's a separate report, it's separate to our audited financial statements. And if you do that voluntary reporting in a separate report, where you respond to stakeholders with all the things they would like you to communicate on, you could look at the United Nations Sustainable Development Goals, you could look at World Economic Forum, International Business Council, which we did at BDO. You could look at Sustainable Accounting Standards Board, the SASB standards. You could look at the Global Reporting Initiative, the GRI standards, which we discussed last month. You could look at International Integrated Reporting Framework, etc. So there's a number of frameworks that you could use for your voluntary reporting. All of them would be based on your stakeholder engagement, your materiality assessment. On the right-hand side is what we would call the mandatory reporting. And that mandatory reporting, and we're not there yet, but it's coming, that mandatory reporting will be in your annual report and linked to your audited financial statements. So at the moment, I call it mandatory in inverted commas. We've got the TCFD recommendations, because we know that ASIC, the ASX, APRA, AASB, all recommend that we include TCFD recommendations in our annual report, and in particular in the operating and financial review part of your annual report. And we know with launch week coming in June, oh, I have to stand up, excuse me, and move a little bit because the lights have just gone out in the meeting room I'm sitting. Oh, it's back on. If you look at mandatory reporting, it's those TCFD recommendations for 30 June 2023 and potentially 30 June 2024, but ultimately mandatory reporting would be in the form of IFRS S1, S2, and further IFRSs in future. Now, in Australia, we're expecting that mandatory reporting of IFRS S2 to be for 30 June 2025, and IFRS S1, the general requirements, a year later. So if you look at sustainability reporting, if people speak to me about sustainability reporting, my first question is always, do you mean sustainability reporting in a separate sustainability report according to any of these blue frameworks, or do you mean sustainability reporting TCFD recommendations in the annual report? So that's a threshold question. What do you want to do? Many organizations are doing both. So they have mandatory reporting in their annual report, so complying with TCFD recommendations, but they also have a separate sustainability report. And a lot of not-for-profits, their separate sustainability report is often called an impact report. We've previously talked about linking all of these. So you could have your sustainability-related financial disclosures, the light blue bit, in your general purpose financial report with your audited financial statements to get your integrated reporting. And then the grey bit would be these other voluntary separate reports, for example, World Economic Forum or GRI. And I think the other thing that's important to note that this light blue box is expected to grow over time and overtake most of the requirements that's currently in this voluntary separate sustainability reports in the grey block. So if we just go back to these separate sustainability reports, the voluntary reporting or the impact reports, many organizations are referring to the Sustainable Development Goals of the United Nations. And they are saying these are the goals that we align to, these are the goals that we want to promote throughout our business. You know, so it's something we see quite common in sustainability reports, the alignment to the Sustainable Development Goals. We also know that the World Economic Forum have grouped all those goals into a 4-pillar framework. And they say you can put the goals into these principles of governance, there's planet, there's people, and there's prosperity. And they actually have core metrics that you can report on, and there's also expanded metrics. So this is where we disclose to what extent we are complying with the principles of governance. We're focusing on the planet, focusing on people, and then prosperity and the community. So this is a framework that BDO Australia has used for our separate sustainability report. And this is maybe just a visual way to link the United Nations Sustainable Development Goals with that of the World Economic Forum, IBC. So principles of governance, we've put 3 goals in there. You can see planet has a number of goals around clean water and sanitation, responsible consumption and production, life below water, life on land, climate action, affordable and clean energy. If you look at people, no poverty, quality education, gender equality, etc. Prosperity, no poverty, reduced inequalities, a decent work and economic growth, etc. So I think it's a nice way of putting the 2 frameworks together and see how the goals and the disclosures of the World Economic Forum fit together. And then obviously for voluntary reports, a lot of organizations use the GRI standards. And there are universal standards. And then there's also sector-specific standards, and there are topic standards. And you don't have to comply with all the sector standards and all the topic standards. You comply with the universal standards, 3 of them, and then you pick up the sector standards applicable to your organization and the topic standards applicable to your organization based on your materiality assessment or your stakeholder engagement. When we get to mandatory reporting or your integrated reporting. This is the reporting that goes in the annual report. It goes with the audited financial statements. I'm saying it's somewhat mandatory at the moment because it's strongly encouraged by ASIC, by the ASX, by APRA, by the AASB. And if we look at these, and in particular for 30 June 2023 reporting, there's an expectation that organisations comply as far as possible with the TCFD recommendations, and that organisations start on this journey to measure and report their carbon footprint. So these are two key focus areas for 30 June 2023 reporting in an annual report. So in the TCFD recommendations, they very nicely link these climate risks and opportunities with financial impact, with audited financial statements. So they're saying, if you look at your climate risks, if you look at your physical risks, the acute and chronic physical climate risks, floods and earthquakes, if you look at transition risk, that is transition risk, transitioning into a low carbon economy around policy, around technology, around the market expectations, around reputation. You look at all of these risks, they impact an organization's strategy, it impacts how an organization manages risk, and ultimately that flows through and have a financial impact on your income statement, your cash flow statement, your balance sheet. It has an impact on your revenue and expenses. It's got an impact on your assets and liabilities, the value of your assets, and how you raise capital and how an organization is financed. But in exactly the same way, the opportunities associated with climate risk, so resource efficiencies, energy sources, new products and services, markets resilience, all of those opportunities impact strategy, impact risk management, and ultimately have a financial impact in the audited financial statements. So climate-related risks are not something separate to financial statements, and therefore there's a need to include these disclosures in the same annual report. A few examples on how sustainability links with financial reporting. Climate risk or sustainability risk could impact asset values. It could lead to the impairment of certain assets. It could lead to the impairment of goodwill. It could link to changes in the useful lives of assets, often short-term useful lives. It could lead to changes in the fair value of assets. You know, there are effects of impairment calculations because there are increased costs or there's reduced demand. You'll have to increase a number of provisions for onerous contracts because there's increased costs or there's reduced demand. There could be provisions or contingent liabilities around fines and penalties for not doing certain things around sustainability and ESG. There could be changes in expected credit losses where you've got loan receivables and other financial assets. And if your customers are impacted by climate change, they will not be able to repay these loans. So sustainability and climate risk has a direct impact on a number of numbers in your audited financial statements. And that's why CFOs, finance teams, audit and risk committees are so interested in climate risk and sustainability. If we look at those TCFD recommendations, it's in the 4 pillars, and there's 11 recommendations. The TCFD recommendations outline that organizations should try to comply with as many of these recommendations as possible. It's quite acceptable to start in the first year by just complying with a number of these recommendations, do a gap analysis on which ones you're not complying with, and develop a roadmap on how you can implement steps to comply with these recommendations by the next year. So many clients come to us and say, please look at our disclosures, tell us to what extent we're complying with the TCFD recommendations, but also do a gap analysis on what we're not complying with and how we could comply with that in future. So what could a roadmap to compliance look like around TCFD recommendations? Now, you might ask, why would we spend so much time and effort on TCFD recommendations if there's a new IFRS S1 and S2 coming? IFRS S2 around climate risk disclosures incorporate the TCFD recommendations and adds a few more things. So if you can focus on the TCFD recommendations for 30 June 2023, it will put you in a really good spot to transition to the more comprehensive IFRS S2 when that becomes mandatory, potentially in financial year 25. I just want to show again that we've got some e-learning, free e-learning on our website that gives you an overview of the TCFD recommendations. So you and your team are really welcome to work through this. It's between 60 and 90 minutes, and I think it's quite useful training. When we look at those TCFD recommendations, and in particular when we look at metrics and targets, one of the recommendations is to disclose Scope 1, Scope 2, and if appropriate, Scope 3 greenhouse gas emissions and the related risks. So many organizations are currently on that journey to measure a baseline Scope 1, Scope 2, and often also Scope 3 emissions. So BDO Australia, for example, our baseline, we've looked at Scope 1, 2, and 3. Some organisations are just starting with Scopes 1 and 2, and then in the next year they'll add Scope 3. There's a lot of lessons to be learned on this journey. Scope 1, are direct emissions, and Scope 2 and 3 are indirect emissions. Scope 2 is somewhat special in that it focuses on electricity, and then the catch-all category is Scope 3, and that is all the other emissions, all the other indirect emissions. Scope 3 are broken down into 15 categories, so it's a very comprehensive exercise, and you might need some assistance with that. Important. It doesn't matter which reporting framework you use. So it doesn't matter whether you use IFRS S2, whether you use TCFD recommendations, whether you use, and so those are in your mandatory reports, or it doesn't matter which framework we use for voluntary reporting. The framework doesn't matter. The way you measure your Scope 1, Scope 2, Scope 3 emissions are all using the same protocol, and that is the greenhouse gas protocol. Therefore, for our next 6 months, when we look at our webinars from July to December, we are going to focus on the greenhouse gas protocol, because that greenhouse gas protocol is reporting framework agnostic. So we want to first help our clients to measure their carbon footprint, and then we can help on reporting using whichever framework you prefer. So if we look at the scopes and the emissions, as I said earlier, Scope 1 is direct greenhouse gas emissions occurring from sources owned or controlled by the company. I should say it's not just properties owned by the company. If you lease properties and those leases are right of use assets on your balance sheet, which all leases should be under IFRS 16, and that could result in Scope 1 emissions. Scope 2 are indirect emissions from generation of purchased electricity consumed by the company. So although it is an indirect emission, if you've purchased electricity and you consume it, that will be Scope 2. And then Scope 3 is the catch-all. It's a consequence of the company's activities, all of the company's activities, but it occurs from sources not owned or controlled by the company. So that could be purchased goods and services, it could be purchased capital goods, it could be business travel, etc. And scope 3, there's a distinction between upstream activities, so everything that happens up to the products and the services arriving at your gate. And then downstream is all the emissions that happen after the goods or services have left your premises. So, for example, that could be transportation and distribution, and it could be recycling of products after the users or your customers have used it. This is a slightly different way of looking at the emissions. So scope 1 is under our direct control, the company facility, owned properties, leased properties. Scope 2 is a little bit of a carve out of the indirect emissions. It's purchased in energy. And then if you look at the 15 categories in scope 3, there's the upstream categories and the downstream categories. So purchased goods and services, fuel and energy activities, business travel, waste generated and downstream, use of sold products, franchises, end-of-life treatment, transportation and distribution, and also investments. How do you account for those? We've got a publication that gives you a little bit of an overview of the greenhouse gas protocol. The greenhouse gas protocol is lengthy. I think the corporate standard is 116 pages, but all the guidance, I think it adds up to around 500-600 pages of guidance on how to do carbon footprint measurement. So this is an at-a-glance publication to give you some idea on where we start. Now, as I said, this is extensive. There are extensive materials around carbon footprint, and we want to try and unpack it for our clients over the next 6 months. So this is our series of 6 webinars, starting with organizational, operational boundaries, and then moving through all the levels or the scopes, and finally talking about decarbonisation. I would like to ask if any of you need help with a measurement of your carbon footprint, and you want to measure potentially scope 1 and 2 to include in your 30 June financial statements, please reach out. To do scope 1 and 2 is very doable for inclusion in 30 June 2023 financial statements. We've got a team that can do that efficiently and effectively, so please reach out if we can help you with that. Scope 3, I would say it's a bit too late to do it for 30 June 2023 reporting, but we can come up with a plan to potentially measure and report next year. I would like to touch on the risk of greenwashing. Now, if you look at greenwashing, ASIC every 6 months issue their focus areas for reporting in the upcoming reporting season. And on the 6th of June, earlier this month, ASIC has released their focus areas for 30 June 2023 reporting. And if you look at the left, and there's a link to that publication, on the left-hand side, the ASIC commissioner said that directors should ensure that investors are properly informed on the impact of changing and uncertain economic and market conditions, and then net zero targets and other developments on financial position and future performance. Impacts on asset values and provisions should be assessed, and uncertainties, key assumptions, business strategies, and risks disclosed. So you can see there's a real focus around business strategy and risks, including how do we deal with climate change. There's a specific mention on net zero targets. So do we measure our carbon footprint, and what are our targets? And then on the right-hand side, there's another extract from that publication. It talks about directors and management should assess how the current and future performance of an entity, the value of its assets and provisions, and business strategies may be affected by changing circumstances, uncertainties, and risks. For example, and I've highlighted it in yellow, impacts of climate change, climate-related events, and transitioning to net zero. So absolutely a focus area for our regulator when they look at financial statements lodged with them is how do we communicate impacts of climate change, climate-related events, and transitioning to net zero. And that means TCFD recommendations around climate change and risks, and that means Scope 1 and Scope 2 as a minimum around transitioning to net zero. ASIC has over the last number of months issued some enforcement media releases, and there's 3 in particular, where they focused on the lack of business risk disclosure in the operating and financial review. And you could look at these media releases where they talk about the need to have increased material business risk disclosure and what the expectations are. And some of these entities had to make some changes. So ASIC made it very clear that they continue to closely review a selection of annual reports on a risk-based approach to ensure entities are correctly disclosing material business risk, which includes sustainability and climate-related risks and opportunities. This is a little bit of additional information around why they're looking at this. So why must, in particular, listed entities disclose material business risks? It's required by Section 299A1 of the Corps Act. The OFR must contain information around business strategies and prospects for future financial years. And there's also a regulatory guide talking about effective disclosure in an operating and financial review. So ASIC has put a big emphasis on the operating and financial review. And then finally, to wrap up our session, how can we help you? When we look at sustainability, at BDO, we can help you with a measurement of your carbon footprint and then also design and implement decarbonisation strategies. We can help you with sustainability reporting, whether it's in your annual report or a separate report, and also we can develop a strategy or roadmap to get to these reports and improve it over time. So sustainability reporting actually captures both parts, the voluntary part and the mandatory part in the annual report. And then finally, BDO, our auditors can provide assurance over your carbon footprint and your sustainability report. If you want to look for some key contacts across the country, Sharif and I are the national leaders. Sharif and Ashley Woodley are based in Perth, Josh Carver and Lynn in Adelaide. In Melbourne, I'm joined by Dylan Byrne. In Sydney, Justin Harness and Kevin Frobers. And in Brisbane, Brett Spicer and Julie Baku. If you want to subscribe for information, we've got corporate reporting insights and sustainability insights. We've got education and training, so we've got these webinars. We've got the TCFD e-learning course for free. And you can also look on our website for all our articles, webinars, etc., on one convenient spot. So I would like to say thank you very much for joining me for this sustainability webinar, for joining us for the webinars over the last 6 months or maybe 18 months. And please register for the upcoming 6 webinars on the greenhouse gas emissions and how we measure those. I'm looking forward to that series. It's exciting work, it's different work, it's new work and very important. Good luck for your 30 June 2023 reporting, whether you are part of the financial reporting team or the sustainability reporting team, and please reach out if we can help you. Thank you for joining.